Joe Davis is head of Vanguard's investment strategy group and global chief economist. He's getting increasingly worried about a recession in 2020. Joe, it's great to speak with you.
Thanks for having me.
Do you think any of what the president is suggesting could actually stave off that recession that you fear could happen in 2020?
Well, I think first we just have to assess what are the odds of a recession. I mean, right now, a recession is not our baseline outlook for 2019, nor for 2020. We're anticipating a sharp deceleration in the global economy. In U.S. and China, we've had that, but the line is holding in the economic data. And so, I think there are an odds of roughly 1 in 3 of a recession next 12 months. Now, again, 1 in 3 is not above 50%, but it's higher than you would want. And so that's why I think the Fed is engaged in some easing here.
But do you think the Fed should aggressively ease further? I mean, do you think 50 basis points? You wanted 50 basis points the last Fed meeting. We got 25. Yep. And so do you think a 50 basis point cut this time around could actually help things, even if at the margins? Do you think Jerome Powell should open the door to that with his speech in Jackson Hole this Friday?
Well, I would. Now, again, we even debate internally at Vanguard in terms of whether the Fed should be cutting rates right now, given the state of the labor market. I think there's some fair debate on that side. But at the end of the day, the fact that no one in the marketplace is talking about upside risk to either growth or inflation tells me that policy is miscalibrated, regardless of the level of interest rates. So I would be going more than expected, only for that surprise factor, and then articulate that the risks are fairly balanced as best they can articulate or see, and then you go from there. So I would try to get ahead of it, but put some line in the sand that you're not going to 100, 150 basis points of cuts. If that's the case, we are already in recession.
When and if we get this downturn that you are talking about, where do you think it starts? Bearing in mind that right now the consumer's doing well, the jobs market's very strong still, although it's starting to show some signs of wear and tear, and business investment has been going down anyway the last several months. So is that the beginning stages of this, or what do you see happening?
Well, again, right now, I see the line holding, and we do not have a recession as the baseline. But the next several months are critical. We're in a critical window here because confidence is high, but rolling over. Investment, as you said, Bill, has been weak and tepid at best. But the financial markets are holding. So what I would be looking for, I mean, another shoe has to drop for a recession to become a reasonable expectation as a mainstream forecast. I would likely focus on the trade area and those tensions because policy uncertainty today is probably one of the most somber readings of the distillation of indicators that we look at. So, again, positively, if we can see uncertainty reduced to some extent, that would start to open the door for some upside risk to growth, at least right now, myself and I think my peers aren't talking about.
How does your portfolio, Joe, and I understand that you have trillions of dollars in assets across various portfolios, but how does this reflect a 1 in 3 chance of recession next year?
Well, certainly it would be from our active bond managers. This is an input into their risk-taking approach. And I think what's important is that our portfolio managers, who are really smart because I work with them every day, they are assessing the odds that we come up with relative to the odds that are priced in the market. And so even if one thinks that a recession is 1 in 3 or 1 in 4, that may not mean that we are withdrawing from the markets. In fact, if anything, we are, we're fairly constructive on certain parts of the market, but we are running portfolios, I think, fairly close to benchmark because I don't think risk premiums and outside risk positions are going to be rewarded, at least right now.
All right. Joe, great to speak with you. Thank you. Joe Davis.
Thank you. Thanks for having me.